Let's throw it back to Mr. Johnson Chuku, the Chief Executive of Cowrie Assets, who we just had a discussion with earlier. Mr. Johnson Chuku, thank you so much for joining us on the program. Okay, we're trying to connect with Mr. Johnson Chuku, but quickly let us look at how the market settled yesterday. Specifically, we got 0.13% performance yesterday in the market. And of course, if you look at the volume of transactions, was at 337.12 million units for a value of 3.40 billion naira. GT Bank in recent times has continued to contribute massively to the value, the turnover of the market. Now we know that this week, FBNHoldings concluded the sale of its 65% stake in FBN Insurance. And this is something that I think a lot of investors have actually been watching lately and wondering what is responsible really for this move. And that's something that we'll get Mr. Johnson Chuku to talk to us about. Specifically, Mr. Johnson Chuku, thank you for joining us on the program this morning again.
Thank you, Temple, for having me again.
Great. So talk us through the significance of this transaction of FBNHoldings, the sale of FBN Insurance, which used to be the second largest life insurance in the country. What basis did this particular financial institution sell that off?
Well, my take is that divestment was basically for the bank to remain true to its core area of business. As you know, FBN Holding has the commercial banking arm, the investment banking and asset management arm, the insurance arm, and the microfinance banking business. So if you take out the FBN Insurance, then you basically see the other subsidiaries are largely banking services. So I think what the bank wants to do is obviously optimize its cost and focus more on its area of core competence. But interestingly, when I looked at the institution they sold, it is not principally because that FBN Insurance is not doing well. Because if you look at their 2019 performance, FBN Insurance contributed about 10% of their profit and about 6% of their gross earnings, which means what they did was obviously to step out away from an area they have considered as no longer core to their operations.
So let's look at the fact that they sold out the insurance wing, but left the insurance brokerage firm or insurance broker firm. What is responsible for that decision? Do we know?
Well, Temple, a lot of banks have adopted what they call back assurance. And that back assurance simply means because the core business of banking involves a lot of insurance. So the insurance brokerage arm will be involved in placing those covers with reputable insurance companies, including Salam, which is what FBN Insurance may become known as. So the insurance brokerage will continue to complement the core business of banking because virtually all banking services require some level of cover. And that, since the bank could have been placing those covers with its own insurance company alone, the brokerage company will distribute those covers to several insurance companies that are reputable, that can handle those things. So I think it is still integral to what the core business of their banking.
But in the end, what will this translate to in terms of bottom line for this institution?
Well, I think if you look at what FBNHoldings did, they just ended financial year, where their turnover, their top line was at the 10th highest in the country. They did a turnover of 626 billion naira, just behind Access Bank that did 666 billion and GT Bank that did, Zenith Bank that did 662 billion. So in terms of the top line, they are doing extremely well. They are the third highest gross earning income bank in the country. But in terms of profitability, they made about 84 billion in profit. And I think what they want to do is obviously further enhance their profitability. We've seen a lot of improvement in their operational efficiency, but there's still a lot of rooms that they need to improve further on operating costs. So by stepping out of FBN Insurance, I want to believe that the liquidity they realize from this will further go into their investment objectives. The bank is pushing towards fintech, and you know that will require a lot of investment, but that's where the competition will be. The competition is all about cost efficiency. It's going to be about leveraging on technology. And as you know, the bank has actually, bank's mobile application was voted as among the best in the country. So I believe they want to realize this from the money they will realize from this sale will further go into investment into areas like fintech, which are the growth sectors of the banking industry.
But do we have an idea of how much this transaction was worth?
Well, I don't have the figures, but if you consider the fact that FBN Insurance had a balance sheet of more than 100 billion naira, and an FBN Insurance had a shareholders fund of about 22 billion naira, which is above the new minimum capital requirement for composite insurance companies. So I want to believe that for the bank to have sold at this time, when that company is doing very well, they must have been offered what they make, an offer they could not afford to refuse. It must be something that was very attractive to them. Remember that Salman has been a co-investor in that company. Yeah. So for a co-investor to want to buy out the core investor simply means they must have seen some very strong opportunity, and they could only have sold if they got a very good consideration.
Mr. Chukwu, there are existing policy holders in FBN Insurance. There are also underwritten risks already. So between Salam Emerging Markets and FBN Holdings, who then bears these responsibilities now going forward?
Well, Salam Holdings, Emerging Market, will actually inherit all the assets and liabilities. They're going to be taking over a company with a balance sheet of 100 billion naira. Shareholders from about 22 billion naira. So they will also inherit all the policies that have been written by FBN Insurance. Remember that Salam Holding is one of the biggest financial institutions in Africa. They are in about 44 countries in the world, about 33 countries in Africa, and they are leading in about 11 of those countries in Africa where they operate. So I don't think any policyholder in FBN Insurance will have any reason to worry, because the company is being transferred to an institution that is one of the strongest in Africa.
Mr. Chukwu, before I let you go, we know that a lot of banks have been streamlining their operations lately. I mean, GT Bank has done the same thing, sold off some of its other subsidiaries. You also had that of FCMB, which also did away with all of those subsidiaries. But of what benefit is streamlining of operations in the current style of markets that we are seeing, as opposed to universal banking style that we used to have before now?
Well, I think what some of the banks are doing is basically to focus on their core business area or core area of competence. I did mention earlier that by divesting from FBN Insurance, what FBN Holdings is obviously doing is to focus on their areas of core competence, which is banking services. The other arms that will be left, but for the brokerage, insurance brokerage firm, are banking services. You have the commercial banking, that's FBN First Bank. Then you have the FBN Quest, which is a merchant banking arm and asset management business. Then you have the FBN Microfinance Bank. These are also the retail or the small scale focused banking services. So the bank will obviously want to focus on its core area of competence, which is basically what GT Bank did around 2012, 2014, when they sold GT Assurance. Okay. And then they also sold GT Bank, GT Mortgage. So those companies we are not sold because they didn't have.
Yes. Mr. Johnson Chukwu, thank you so very much. Thank you so much for your insights on this particular transaction. We appreciate them. Mr. Johnson Chukwu is the Chief Executive of Cowrie Asset Management. This is back to you now.